What's up with these interest rates? Stick around, I'm going to give you my prediction. Hello, welcome to my YouTube channel. My name is Lee Shane. I'm your local real estate professional. In today's video, I'm going to give you a quick market update, and then we're going to talk about my prediction on interest rates. So let's start with some good news. Tennessee home sales are up 20% in the fourth quarter of 2021, along with an 18% increase in inventory. Now, this is mostly due to sellers taking advantage of the market, people wanting to relocate to Tennessee, and of course the new home construction. According to 2021 transitional data compiled for U-Haul, Tennessee dropped from first place to third place in overall state growth, with a 17% overall year-over-year increase, with 50% of one-way moves relocating into the state, with Nashville being top of the list, followed by the Tri-Cities, and then a little further down the list was Knoxville. As we're all beginning to feel the effects of inflation everywhere we turn, interest rates are no different. Just a year ago, for a 30-year mortgage, interest rates were down around the 2% mark. Compare that to today, January 2022, where we are edging up over that 3% mark. As the feds begin to taper their purchase of mortgage-backed bonds, this will in turn drive up interest rates, and we can expect to see interest rates exceed 3.5% probably by the end of the first quarter, and possibly go as high as 4% before the end of 2022. So what exactly does it mean for a buyer? I mean, 0.5% here or there doesn't sound like much, but the reality is, as interest rates climb, it decreases the buyer's ability to purchase one of these homes that are artificially inflated in price due to the current supply and demand. For example, an FHA or government-backed loan, 30 years, including PMI, taxes, and insurance, at 3% for a $300,000 loan, your monthly payment is going to be somewhere around $1,633 a month. Now you take that same $300,000 loan and you bump the interest rates up to 4%, now your monthly payment goes up to over $1,800 a month. Again, doesn't sound like much, but depending upon your current debt to income ratio, along with some other numbers that the lenders use, it could potentially prohibit you from buying the amount of house that you have actually set out to purchase. Let me put it into perspective in another way. Let's look at overall interest paid. Let's use that same $300,000 mortgage, 30 years, fixed, at 3%. If you go the length of the term for 30 years, you're going to pay somewhere over $155,000 in interest alone. Now, take that same $300,000 loan at 4% for 30 years. And again, if you go the entire 30-year term, you're going to pay approximately $216,000 in interest alone. A difference of over $60,000 just in interest for 1% difference in interest rate. But wait, interest rates don't just affect the buyer. Yes, sellers are affected as well. Being that buyers can't buy as much, that often means that there aren't as many people looking or able to buy their homes, therefore pushing down the demand, pushing down the prices, and putting less money into their pocket, and create the circle. Thus, they're unable to buy as much house as they originally intended to. So what's the bottom line? If you're considering buying a house, don't wait. Go ahead and get pre-approved, and if possible, lock in a rate and buy the house that you ultimately want. Now, if you're considering selling your home, go ahead, get it on the market, and take advantage of the current seller's market. Don't wait until you get all the repairs made, make the upgrades, and Wait till the weather is perfect. Talk with your real estate agent, and they will help guide you and help you price your home and advise you if there's any repairs that need to be made prior to putting the house on the market for sale. My suggestion is, if you're considering selling your home, before you put it on the market, take a close look at what you already have. Consider refinancing at a lower rate, and then cash out and use those funds to upgrade your current house to make it exactly what you want. Ultimately, you're probably going to end up with a lower payment overall than if you were to go out and buy another house and still have to put your personal touches into it. So, what's your prediction? I'd love to hear it. Leave it down below in the comments section, and we'll find out in the coming months. I certainly hope that I'm wrong, but as they say, all good things must come to an end. Now, I hope that you found the information in this video to be helpful. And if you haven't already, please consider subscribing and ring that bell. That way you're notified each time that I post new content. Remember, if you're looking to buy or sell, give me a call for a no obligation consultation. Now, I look forward to seeing you again on the next one. So until then, God bless.